Hi everyone, hope you're all doing well, and today I'm going to talk about the stock market next week and key things to look for in the stock market next week, as well as a bit of a general update with the stock market in general. As you guys probably know, 2022 so far has been ugly for the stock market. Well, the big thing is that really before even 2022, if you were involved in small caps, growth stocks, you know 2021 wasn't a great year for them, and especially towards the back end, a lot of them got killed off. Now the big difference is that because they were getting killed off, but we had indexes still doing very well, and indexes were doing well. So anyone involved in buying indexes or value stocks, a lot of them sort of investors were like, yeah, there's nothing wrong with the stock market, it's just small caps and growth stocks. But what we've had in the first 3 weeks of the trading year so far in 2022 especially, is we've had all value stocks, growth stocks, small market cap stocks still getting killed off, value joining in now. We've had indexes that are falling off a cliff, and just in general there's a lot more negativity out there with the stock market. And I'm probably going to make a video about this actually tomorrow, talking about a lot of the negativity that's out there, because the last video that I made on Friday, the negativity in like the comment section was unbelievable. Like it's the most negative comment section I've ever seen. Like the negativity out there, I would say that 50% of the comments were negative, like, you know, fed up on this stock or these stocks or stock market in general. Like a lot of people are, you know, struggling with the stock market now. A lot, you know, the stock market has been really good the last kind of couple of years since we've had the CV dip. You know, we've been on a good run, and now we're actually starting to hit the point of view where growth stocks and small market caps have been slumped for a good few months, and now like the indexes are joining in. The negativity out there is just so much higher than what it was previously, and you're starting to see like, now we're starting to get into these times where we don't just have a stock market that goes up all the time. When we're actually starting to get into these bit of a bear market territory, we're actually starting to see now, okay, who is actually investing for the long term, who has confidence in the stocks, who has invested purely for 5 years and has a game plan of why they have invested into that company, and not just, you know, emotional investors invested in ticker symbols, stock charts. It's actually starting to come a really interesting time, and right now, more than anything, you know, there's a lot of stocks out there that are starting to, you know, show up in really good prices. You know, there's stocks that maybe not the indexes because they've only just started dipping recently, but a lot of these growth stocks, small market cap stocks, they've been dipping for a good few months now, and a lot of them are like at pre-pandemic prices. A lot of them are at, you know, the cheapest valuations they have historically been at. And if you would generally like picking up good companies at cheap prices, you're looking at a few of these companies right now going, you're giving me that company that's made all this progress at the lowest valuation it's ever been at. Of course, this is a great opportunity if you're investing for the long term. But as well as that, now you're seeing people that are claiming to be long-term investors that are now starting to see stocks dip and like, oh, okay, I don't like this. And it's actually starting to come a really interesting time now, from distinguishing between people who claim to be long-term investors and who are actually long-term investors and who are actually really enjoying this stock market. And that was very clear with the video that I did on Friday. Like, they're not negative people that are getting very emotional and haven't really got a game plan when they invest into this company. It's starting to come very clear, and it's a big example right now is like on the YouTube side of it, is one of the biggest stock market YouTubers out there, probably the biggest stock market YouTuber out there, is Meet Kevin. Meet Kevin basically came out the other day and said that he's selling all his stocks off. Now, you might like him, you might dislike him, you might agree with that, you might disagree with that. In my opinion, if right now, if you have an S&P 500 that's only gone down slightly, and all of a sudden you're thinking, oh, you know what, I'm going to sell all my stocks and try time the market, it's absolutely bonkers. So, I mean, that's probably worth a video on its own talking about that, but you've even got like the likes of that going on right now. So just in general, the whole market negativity out there is very high right now. Now, going forward, obviously we don't know when the stock market is going to go, you know, going to bottom. We don't know if it's going to carry on lower. You know, no one can time the stock market. But generally, I thought what would be very important is just kind of talk about the last 3 weeks and probably key things going into next week in general. So this is a bit more not really me, you know, talking about positioning yourself for the long term. Just a few key points to talk about that have happened, and probably a few things to like look at going forward. But in general, I'll probably make a video talking about the long term potential of the stock market probably tomorrow anyway. So I hope that's all useful. Now, going into the Nasdaq, you'll know that this has now entered a correction territory. So from 19th of November, this is now down 14%, which is quite a fair amount. And obviously, it will be interesting to see if this goes, you know, below 20% and we enter a crash. The S&P 500 isn't down as much as that, but even the S&P 500 now is down, I think it's about 8%, 8.125%. So this is only 2% off being off a correction itself. So we'll see if the Nasdaq does start pushing towards a crash territory and the S&P goes down to a correction territory. There's going to be probably key events that will probably dictate that next week, which we're going to talk about. But what has really sent a lot of it, like I said earlier, small market caps, growth stocks, a lot of them have really been beaten down for the last few months. I'm looking at a lot of the small market caps now and going, a lot of them have lost like 70% of the value at the lowest valuations they've ever been at. I generally look at a lot of small caps now and thinking there's so much negativity around them that when there's that much negativity, you actually start thinking you could be near the bottom right now. So with them, I'm actually looking at a few of them, and a lot of them will report earnings in another 2-3 weeks time. And I generally look at them thinking, with the amount of fear out there, I wouldn't be too surprised to see a lot of these small market caps growth stocks be quite near the bottom now. But with the indexes, I think it's probably a bit different. The S&P 500 has hardly dropped. The Nasdaq has dropped a bit more. But what you have now is you have the likes of JP Morgan. JP Morgan came out, released pretty decent earnings, but their outlook was a little bit weaker than what people were hoping for. Now, what that led to do is JP Morgan had an awful week. The stock was down over 10%, if I can load it up here. Yeah, about 10% it was down. And what did that lead? Well, the S&P 500, what happened there? The S&P 500 was down 5%. So we have a lot of these more safer stocks, what you would say are safer stocks, that are now having dips, because a lot of these are coming out with have been holding up high valuations, and while they're holding up high valuations and there's a little bit of bump in the outlook, and there's already a lot of negativity out there, we're seeing these sort of stocks sell off, and that's also making it to the indexes, which haven't been really touched. A lot of these indexes have hardly gone down compared to what the rest of the market's been at. We've been in a bit of a false stock market for a long time, as you probably know, and so we've had the likes of JP Morgan that's dragged the stock market down, and the one stock on Friday that really did drag the stock market down was Netflix. Netflix came out with some earnings which I didn't think were like terrible, and they weren't great, but they weren't like terrible, and it was quite surprised to see the stock actually fall down 20%. The stock was down 21% on Friday after these earnings, and what you have is you have a stock here that hasn't really had a pullback. You look at the likes of other stocks that have been on good runs in 2020 and 2021 and benefited from the CV situation. Your likes of Zoom, for example, the likes of Teladoc, for example. Peloton, that's a whole different ball game. That one, that's absolutely dived. But you look at them sort of companies like Zoom and Teladoc, for example, and they have gone to quite high valuations and they've had a fair amount of pullback. But you have a stock like Netflix that is classed as one of the big techs, one of the major holdings in, the S&P 500 and the Nasdaq, and it hasn't had a really big pullback. So even though it was a bit of a surprise to see it drop 21%, and you think it's a bit of an overreaction, I guess the little difference with this one is that it hasn't really had a pullback. You look at the stock chart, it hasn't pulled back like the rest of the market. So now that it was actually only down, 10%, to actually have a bit more of a fall off does kind of make sense. This has been a stock that's held up its value compared to the small market caps and growth stocks. So maybe that because Netflix has held its value and it's benefited so much from the CV situation, it's about time it joined the other stocks that have fallen off a cliff. So even though the earnings weren't terrible, this is probably why we're seeing that sort of reaction to this stock. And because of that drop in, we saw like the likes of the Nasdaq, that was down 2.7% on Friday. So maybe we're just seeing a lot more of the weakness finally going to the broader market, I guess, right now. And going into next week, obviously we have earnings season starting to really pick up. Logitech, I'll be keeping an eye on that one for Corsair. We've got Johnson & Johnson, General Electric, Verizon, American Express, 3M. Probably the big one, Microsoft. That's probably going to dictate where the market goes next week. If Microsoft come out with strong earnings, if they put strong outlook out there. The problem is like Netflix is still at a really high valuation, but if this has a decent earnings, then maybe the market holds up next week. If it does a Netflix, then maybe we'll see the stock market be dragged lower by the likes of Microsoft. And the same for the Wednesday. You got Boeing, AT&T, Tesla. That's quite a stock that controls the stock market now. Intel, Lam Research, ServiceNow, Lending Club. Thursday, MasterCard, Visa. That's going to be a big one because that's payments. We're going to know how the economy is doing. If they come with strong outlook, that's probably going to be positive. If they have weak outlook, saying they expect payment volumes to be weak, that's probably going to take a tumble on the stock market. And then you have the likes of Apple as well. Apple are going to come out with earnings, and that's going to move the markets a huge amount. And people are suggesting Apple are going to have a weak quarter. iPhone sales are weak at the moment, but they say that every quarter. So between these stocks of Apple, Microsoft, Mastercard, Visa, they're pretty much going to control the market next week, and that's probably where we see if we have a pretty good week and we break the kind of downtrend of the last few weeks that we've had in the stock market, or if the outlooks are weak on these, then they're probably going to carry on this downtrend that we are on at the moment. So yeah, just thought I'd talk about that, just generally the bit of negativity that's out there at the moment. I'm probably going to make a full video on that tomorrow, talking about the negativity side of it at the moment, and a bit more from a longer term point of view that I normally go from. But I thought I'd just kind of talk about what's going on at the moment, and also some key things to kind of look out for next week that might be important anyway. So yeah, I hope you enjoyed the video anyway. If you could hit the like button, that'd be absolutely amazing. If you're new, subscribe, and I'll see you on the next video.